We can look forward to big days ahead for silver, for gold, for the precious metal mining stocks. We're going to talk about all the reasons why in this big update video today. But first, thank you for being here. Thanks for being part of the basement. You've chosen to spend your time here. I hope you feel like you found a little home away from home. Don't forget, please subscribe to the channel. Leave a comment in the comment section. Trust me, a lot of people don't agree with me. That's okay. You can read all about it down there in the comments. But let's start with something very fun. Let's talk about silver 10x. And let's go check out what our friend Digger has to say and why this could be a distinct possibility. I hadn't seen it put quite this way. Digger says it's clear that silver, here we go. It's clear that silver is about to break out on the yearly chart and the cup and handle pattern. So now we're talking about where we close at the end of this year. We're already in July, guys. If we are, look at this chart, able to do a yearly close about where we are right now, or possibly a little bit higher, we have definitely then on another time frame broken out of this what is epic cup and handle pattern. Of course, for those of you who don't know, well, he's got it in blue, but we'll follow it along here. There's the cup and there's the handle, and it goes all the way back to 1980, which is 45 years old. These are yearly candles, so each one of these blocks represents a yearly close in the silver price. And if you look at it on a yearly basis, right, everybody says, oh, silver got to 50. That's on a daily basis. On an annual basis, the rim or the line that determines the cup and handle is closer to here, closer down to where we are right now in the silver price. When we break out of this, that's why he's talking about a silver price. I believe his target up here is about $238 per ounce. But we will have to see what the rest of the year brings. We do know, and we're going to look at the most recent silver chart toward the end of this video. Do you feel that silver and gold, for that matter, have been consolidating here for a while, building a platform from which they can? And I believe, just my opinion, I'm not a financial advisor. Don't make any financial decisions based on anything that I say. I'm just a guy in his basement who loves to talk about silver and gold. But I believe we could be in for some really heady times. And let's look at some big reasons why right now. What about the Swiss banks? Remember, I'm 55 years old. I don't know how old you are, but when I grew up, it was always like, oh, the Swiss bankers, the secret Swiss bankers. Let's look at what the world's biggest Swiss bank is saying about silver in particular. And then we got news from hedge funds, sovereign wealth funds, central banks, and news about the Fed tomorrow as well. But let's go out here to investing.com and see what they're telling us about silver. Silver price outlook. UBS, and I need to share the same. There we go. Okay, silver price outlook. UBS updates its price targets. Oh, really? Okay. And then we're going to talk about who UBS is and why we need to pay attention to this. There's a reason why. UBS strategists, they're not analysts, they're strategists, raised their forecast for silver prices to $42 an ounce across all tenors through June of 2026, citing stronger investment demand and a recovery in industrial activity. Guys, it can go way higher than that, because when we do see the Western investor come back in full force, check, right? We know China, right? There's demand for silver, massive, check. India, check. When the Western investor comes back, it's going to open the floodgates. It's going to be like, it's going to ruin the COMEX and the LBMA. It's going to be like trying to drain Hoover Dam with a garden hose. And I want to give credit to that guy, that analyst. Somebody else made that up, but I love that, because that's the situation that we're looking at. Short squeeze in silver. Has that ever happened before? Yes. Are we set up for a short squeeze like never before? Yes. Wait till we look next. We're going to look at some recent short squeeze type data here in 1 second. But first, let's talk about the Swiss banker, UBS. Why do we want to listen to this Swiss bank? They're a global investment bank and financial services firm headquartered in Switzerland. Remember that? Swiss bank accounts? It's one of the world's largest wealth managers and a leading universal bank in Switzerland, also offering asset management and investment banking services to a wide range of clients worldwide. So we have one of the world's biggest banks telling us silver is heading much, much higher, and we know they're underestimating. It's even going to go higher than that. But let's look at some data that could indicate to us that we could be heading into the short squeeze. Another piece of the puzzle. This one was shared by Albert Herney, chartered financial analyst, shorting SLV to zero. Okay. Short volume spikes to 30 million plus million shares, close to an all-time record high. That's PSLV. I'm sorry, I didn't mention that over there on the left. Let me circle that. It's kind of hard to see, but it does say PSLV. That is the Sprott Physical Silver Trust. Okay, that's the Canadian version of our SLV ETF here in the United States. However, the Sprott Physical Trust is known, and people are much more confident. There's some suspicion about the SLV, but the PSLV, there's much more confidence that they actually do own all the silver, physical silver, that they purport to own. People trust PSLV is the general consensus. I'm not saying anything, but that's the general consensus. But short volume is at an all-time record high. Hold on here. Did you see that? Did you catch that? All-time record high. And we know that on the COMEX and the LBMA, there's also historic levels of shorts in the market. So, guys, we could easily be heading toward a short squeeze situation in the silver market. However, that's been predicted for decades and has really yet to really materialize, but it can, and many people think, the smartest analysts think, that it will indeed happen. But let's talk about the precious metals through the eyes of some other big players. We're going to talk about central banks, sovereign wealth funds, and we're going to talk about hedge funds. What did Ray Dalio say? Ray Dalio, right, the founder of Bridgewater Capital, started out of an apartment, one of the richer men in the world. Bridgewater Capital, if not the biggest, the most respected hedge fund in the world. And listen to what Ray said. This comes from our friend Make Gold Great Again. This is just recently. Ray Dalio said, quote, "If you were neutral, you didn't have a point of view, and you were optimizing your portfolio for the best return to risk ratio, you would have about 15% of your money in gold or Bitcoin. I'm strongly preferring gold to Bitcoin, but that's up to you." There we have it, right? Guys, the smartest people in the room continue to tell us the precious metals are our life raft. Now, let's go look at what the central banks are doing. And why do we pay attention to the central banks? I'm going to tell you right now why we pay attention to the central banks, because they are the most in the know. You think those Swiss bankers know a lot? You think those hedge fund gurus like Ray Dalio know a lot? The central banks, they control, right? They control the puppet show, basically. So when they are doing something, we want to definitely pay attention. But before we do that, I do want to say thank you to our channel sponsor, First Mint. They're a silver mint located in Las Vegas, Nevada. But what makes them, amongst other things, so special is that they are owned by First Majestic Silver, Keith Neumeyer's massive silver mining company. So First Majestic Silver mines silver in Mexico, sends it to First Mint, where it's transformed into world-class bullion products, and then goes straight to you. Literally, freshest silver on the market, from the mine to the mint to you. Did you notice something about that chain of transactions? It never goes to the COMEX. Not only is it the freshest silver on the market, not only is it beautiful silver, but it's never touched by the COMEX or the LBMA. Here is upstairs Susie. That's my wife. That's her favorite piece. That's a 5-ounce bar from First Mint. It is absolutely beautiful. Probably the most robust. I love holding this in my hand. Like the most robust 5-ounce bar that I've ever felt. Here, I'll run you out to their website just for a few seconds so you can see where you can check them out for yourself. Here we are at firstmint.com. There's their Las Vegas round. They have all these unique products, awesome awesome products that they make. There's the bars. There's their Year of the Snake round. Absolutely beautiful. I have one of those. Year of the Dragon. I also have one. Beautiful. And their Buffalo round. One of my favorite silver designs ever is this Indian on the back of that. So here it is, firstmint.com. Great prices, great selection. Keith Neumeyer company, right? He heads up First Majestic, who owns First Mint, a company you can trust. And they have free shipping on orders of $199 or higher. And as a special bonus to you, because we love silver, they have a discount code, VIPRB. What are the central banks doing? The central bankers. And then we're going to talk about Jerome Powell later, because tomorrow's a massive news day for the world of precious metals. But when we go out here and take a look at what the central banks are doing, and that's not it. This is it. Here we go. From Make Gold Great Again. I love this guy. He says, reminder, every central bank on earth is buying gold right now. This is the funny part. Your financial advisor is quite the contrarian. So we know all the data coming through relating to central banks, the most sophisticated, the most in the know in the world of finance, fiat money, but we're fiat fighters of silver and gold. But the central banks are buying gold hand over fist. Don't listen to what they say. Watch what they do. Think about it, right? You know people like that in your life, right? They say one thing, they do something else. You learn real quickly. Watch what they do, not what they say. Let's apply that same logic to the world of central banks. The world central banks are buying gold hand over fist. And I got to give Make Gold Great some credit. Let's give him a thumbs up, guys. That's pretty darn funny. Your financial advisor at the TradFi, traditional finance company, is quite the contrarian. The reason why, you know why they don't talk about gold and silver at these big name brand financial services companies? Because they don't make any money off of it. If they put you in a mutual fund or whatever, they get a little commission that goes on for years and years and years, generally speaking. It's very difficult for them to pull that off in the world of precious metals, okay? We are contrarians, but we are also in the know about what real money is. We are the fiat fighters, huh? We don't believe in, look, we love our country. Here, I love this. Let me show you this. It's been a while since we looked at this. We're a little suspicious of this paper, right? Can this be printed? Yes, right? But there's a reason why we don't like it. We like this here. Oh, that's upside down. Here we go. Let me show you that. Okay, look real closely. That's $1, right? No, it says at the very top, silver certificate. And at the bottom, it says this. I'll read it to you. It says $1 in silver payable to the bearer on demand. I wonder if there's a year on here. I think there is. 19 something, 17. Anyway, yeah. So, that's why. All right, let's get back on track. I apologize. Who else is buying? So we've got the hedge funds. We got the world central banks. What about the sovereign wealth funds? Let's look at that, right? The big money controlled by countries, that type of thing. And we're going to go out to the Silver Academy for this one. And the headline was half of all SWFs, that stands for Sovereign Wealth Fund, plan to increase gold allocations in 2025. Sovereign wealth funds are joining central banks and accumulating gold as a strategic reserve asset and hedge against mounting global risk. And we know what's good for gold is good for silver. What's good for the goose is good for the gander, all that great stuff. Here we go. Institutional investors, think pension funds, insurance giants, and Middle Eastern sovereign wealth vehicles are entering the melee. Even hedge funds have amped up gold exposure. We looked at that a few days ago. Hedge funds are buying more and more and more gold, okay? Magnetized by the metal's resilience against inflation. Oh, I didn't realize that. Did you realize that? The gold and silver protect you against inflation? They've only been doing it for 4,000 years. Financial system tremors and mounting global risks. Gold-backed ETFs have just posted their biggest inflows since 2020. That was during the C-19 crisis. Nearly 400 metric tons, or about 38 billion, signaling a groundswell of confidence in gold's role as a bedrock amid worldwide volatility. Okay, now it gets even more interesting. This is a bonus I didn't even tease for you guys. But how about silver in the 70s? You like the sound of that? But you don't know what I'm talking about. Silver in the 70s. Am I talking about the silver price in the 70s? Well, or am I talking about silver during the 1970s? Or are we talking about both at the same time? We're going to talk about that next. But I also want to say thank you to channel sponsor First Mining Gold. We just talked a lot about gold. First Mining Gold is a Canadian gold development stage company with not one, but two massive multi-million ounce gold development stage projects in Canada, Springpole in Ontario and Duparquet in Quebec. They're moving these projects through the development stage. It's exciting, right? Big opportunity for big catalyst. And what I like most about them is they have these massive deposits that have been established over decades and decades of drilling. Tens of millions, 100 million plus has been spent on defining these projects. The gold is in the ground. Look, I'm not a financial advisor. I'm not giving financial advice, but it's a stock that I've owned for years and years. And I like the fact that I know that I've got gold in the ground in Canada. You can learn more about them at firstmininggold.com. What about the 70s? Well, here's big breaking news. Let me read this to you. The dollar, the US dollar, that paper thing that flew across the screen earlier, is off to its worst start to a year since 1971. 1971? I was 1 year old. How old were you? That doesn't really matter. What matters is starting in 1971 through 1980, right, when they had a comparable horrible start to the year with the dollar, from 1971 to 1980, the price of silver and gold absolutely went through the roof. Now, it might be hard for you to visualize that since we're down here in the basement together. And I'll tell you again, thank you for being here. Don't forget to subscribe to the channel. It's free. Give it a thumbs up. Leave a mean comment in the comment section. But in the 1970s, the last time the dollar collapsed like this to start the decade, the price of gold and silver went through the roof. And why? Well, those of you who have been down here in the basement with me, suffering through for years together, realize that we've been talking about the S word. Now, do you know what the S word is? Stagflation. That's what drove the price of gold, drove the price of silver. And we're talking like went up not 20, 30%, but like 20, 30 times in value. We are in that exact same situation right now, but it's even worse because back then you didn't have China and India and Russia gobbling up all the world's gold and silver. And guess what? But wait, there's more. On top of that, the other reason why things could even be crazier now is the United States was actually, believe it or not, I know it's going to be hard for you to believe this, but the United States was actually in better financial condition back then. So we're moving into an environment very similar to the 1970s, but we are in a much more precarious position. But no, you don't want to. You don't want to own any silver or gold. I'm not telling you what to do. You guys have your brains, right? We know the basement dwellers typically have, and I've learned this through the YouTube analytics, typically have a little more intellectual horsepower than the average bear. But guys, we are headed into an unbelievable, interesting time. We're going to talk about Jerome Powell and the Fed. That's tomorrow. I'll tell you what to expect, okay? Yes, I have a crystal ball. I know the secret's out. It works like 63% of the time. But first, let's just talk about what's been going on in the silver price. Let me pull it up, and the gold price for that matter as well. Let's take a look at this chart from our friends at, silver's up 11 cents. Wow. Okay. But have you noticed, like we have been consolidating. This is a 1-day chart. Let's go to a 1-month chart of silver. Yeah, you can see it. Let me draw some lines on here for you. But is it just me? Why is that not working? Uh-oh. I lost my ability to draw lines. Well, I guess, hold on here. Oh, there we go. Now she's working. We have been, what's this, back to, let's say it's been like 2 weeks, okay, that silver's been holding this 38, and this is in the futures market, 38 range. Now, of course, we got up here to 39, but we've been in this channel. What's important here, okay, this kind of staying within a range, that's consolidation. So what that means is all the people, not you, not talking about you, not talking about me. We're talking about those people that maybe don't believe in the silver thesis as much as we do. Those people are like, oh, silver got it. It didn't get through 40. I got to sell my silver. I got to sell my silver. All the scaredy cats, bye-bye. They left. Bye-bye. And good luck to them. Maybe they're right. Like, my crystal ball only works 64% of the time. But those people that left, that's why they call it consolidation, have been replaced by fiat fighters, silver stallions, basement dwellers, whatever we want to call ourselves, people that have strong conviction for the future of silver. Don't forget, this is the truth. This is the reality. When silver now breaks above $40 per ounce on many levels, we're going to be off to the races. We're going to be down here. I'll be doing live streams. I'll be spinning around in the chair because we're going to go from $40 silver to $50 silver, lickety split. And then 50 is going to be another resistance point. No doubt about it. Oh, thank you, Susie. That's upstairs Susie. I guess she's decided not to use her walkie-talkie. For those of you who don't know, that's upstairs Susie. That's my wife. She loves silver. You guys know her. You guys love her. Usually she talks to me on the walkie-talkie, but she just alerted me that we're almost to 100 thumbs up, which means, yes, that big special treat, I'll ring the golden gong. But let me get back to my thought, which is $40 silver. It's a psychological level, but guess what, right? All the people that got silver at that point, most all of them, right, are those new people that have joined us already that know the future of silver, and there's hardly anybody out there that's left that bought silver above $40. So that means there's not going to be many sellers. There might be a few, right? Because there were times when silver got to 50 back in 1980. Do you really think that there's a lot of people out there that bought silver in 1980 for $45 an ounce and are sitting waiting saying, if it ever gets back to $45, I'm going to sell? No. So what that means in very complex technical terms is there's very little overhead resistance. Now let's check with Susie and see if we got to 100 thumbs up. Susie, are you on? Over? Okay, she's not there. Hold on, I'll yell at her. Oh, she says we got it. She yelled at me down the steps. Okay, I will say hi to people. Hi to people. Let me ring the golden gong. Then we're going to talk about Jerome and what to expect tomorrow. And then I'll say hi to some people. Okay? People, because people matter. You're all special. You're all individual. I'm going to ring the golden gong because we got a golden future. And on top of that, look at that thing. Isn't that cool? I appreciate you for coming to the basement. I love the way it resonates. And no, it's not really made out of gold. Okay. I don't know what it's made out of. Brass? I don't know. I'm not, I know it's not made out of gold. I don't think so. Anyway. All right, let's talk about the Fed. Tomorrow's Fed day. Be ready. Woo, be scared. We could have big movements in the market tomorrow. Odds are, let's run out. We'll take a look. I'll tell you what to expect. Okay. I know I do all the work. You just get to sit there and laugh at me. Laugh with me. Oh, wow. So tomorrow, this is the Chicago Mercantile Exchange Fed Watch tool. And what it tells us is in exactly 1 day, 0 hours and 42 minutes on the dot almost, we are going to hear from our old friend Jerome Powell at the Federal Reserve about interest rates. But don't be worried, because as I'm going to show you right here, there's a 96% chance that rates are going to remain the same. This last circle I'm making is the current target rate. So we got like a 3% chance. That would be what? 1 in 33.3 that we will have a rate cut tomorrow. Oh, wow, 3.1% chance. However, let's go see what they're saying we can expect in September 17th, which is like 6 weeks away. They are now saying that we have a 2/3 chance. Come on, why are you not working? There we go. 65% chance that we will have a rate cut, okay, down to 4% from the current rate, which is 4.25%, and about a 30% chance over here that rates will remain the same. I think there's more than a 3% chance tomorrow that they'll cut rates. I think that with all the turmoil going on between the White House and Jerome Powell, did you see when Trump visited the Fed? It was the first time that a U.S. president visited the Federal Reserve in over 20 years. Let's just say it did not look like a comfortable meeting between Jerome Powell and Donald Trump. Okay, so tomorrow, what's important, not so much what they do, but what they say. The algorithms will be going through all the words that are in the official statement. I presume that Powell will do a press conference afterwards. If he says anything bullish or hawkish or whatever, tightening, loosening, that could have a big impact. Tomorrow could be a big day in the precious metals market. So buckle up, my friends. It could be a very, very interesting day. But when we look at the big picture, when we look at the fact that the silver price in particular, gold is just awesome. Gold is golden, no doubt about it. When we look at the silver price and realize that we are breaking out of a 45-year cup and handle pattern on many different time frames, and then we consider all these different factors that we looked at, when we consider the fact that the world central banks, when we consider the fact that the world sovereign wealth funds, the big Swiss bankers, UBS, right? UBS Warwick, or I don't know, whatever it's called, right? We've got wind in our sails. Ask yourself, right? Where would you, and what did Ray Dalio said? He was like, if you could erase your brain, any dummy would realize you want to have at least 15% of your money in gold. And I'll say silver as well, but that's just my opinion. I'm not speaking for Mr. Dalio. I think the future looks bright. And then when we consider, just a little cherry on top, right? When we look at the U.S. debt clock and we realize more than $37 trillion in debt, that our dollar is now basically backed up by debt, and they're trying to find new and creative ways to issue more debt, right? This new budget, whatever, it's all, it's getting absolutely insane. Oh, I promised I'd say hi. Okay, here's the funnest part of the live stream. 500 people. And this was a what do you call it? A snap live stream. You guys are awesome. I'm glad you're here. You are important. You are special. What I want you to do is in the comment section, tell us where you're from. I'm going to say, hey, Jake from Jake's Custom Parts, thank you for being part of the basement. Jake has been a critical member and supporter and moderator. Thank you, Jake. Good to see you, brother. Okay. Yeah, everybody loves Jake. Tell me where you are from. Okay. Like your city, your state, your country, your planet, whatever you're happy with. And I will spend 60 seconds. Montana, boom, boom. Boom, boom. Okay. Hey, thanks, Ron. Dallas, Texas, Texan, intelligible. Montana, Utah, John Townley, Texas, Jake's Custom Parts, Communist Republic of the United Kingdom, North Carolina, Texas, Oklahoma, Canada, Artie Burns, Crestwood, Missouri, Ron, hey, neighbor, North Carolina, Marion, Spirit Lake, Idaho, Indiana, Netherlands, Ramon from Netherlands, the Philippines. I love the Philippines. Fort Myers, Florida. Man, unbelievable. Albania, West Virginia, Pune, India. Hello, Hemant. Good to see you. Stacy, 30 miles north. All right. So that would mean 30 miles north, Missouri or Illinois. Anyway, Maryland, Alabama. Where else? Texan intelligible. Wascott Front. I don't know where that is. Okay. All right. All right, guys. Wherever you are, you might be in your family room, your living room, your car, your spaceship. I don't know. Maybe you're on an airplane. You can get Wi-Fi on airplanes now. If I'm flying somewhere, please let me know. I'd like to go somewhere nice. You're important. I appreciate you being here. On behalf of myself, on behalf of Susie, I wish you a pleasant remainder of your day. Let's go silver. Let's go gold. Okay. Be good to yourself. And I will look forward to seeing you. Yes, you. Don't forget, subscribe next time. See you guys. Bye-bye.